Hello, I'm Matt Parrott, a Chartered Tax Advisor with Tax Shop Accountants in Wellington. Today, three very common tax allowances that are never claimed by individuals. Not necessarily for self-employed, this is generally employed people. They just don't claim them because they don't know about them. So the three most common that I see every day are, firstly, the marriage allowance transfer. Now what that means is you've got a husband and wife, one of them doesn't work and has therefore not used their personal allowance, where the other one does work but is not a higher rate taxpayer, i.e. let's take an example where the husband earns £25,000 a year on PAYE, the wife has a part-time job earning say £5,000, so she has spare allowances, therefore the marriage allowance will kick in for them if they claim it. Now, to claim it, you have to create a personal tax account with HMRC. And it's not quite as daunting as it may seem. You need to log on to the government website, put in create a personal tax account. You'll need a passport with you, you'll need a mobile phone because they'll text you with an authentication code, and it's literally a 5 or 10 minute process. Once in the account, one of the sections in it is the marriage allowance transfer. And once this has been done, you can claim for the years in question that you want to claim for. And it started in 1516, so at the date of this recording, which is February 2018, you can claim for 3 years worth of it. And it's £230 per year. So if you're claiming today, it could be worth £690. So for 10 minutes work, well worth claiming. The second most common will be pension payments that have not been claimed. Now, generally speaking, in the majority of cases, pensions are paid after what they call basic rate tax. So if you are physically paying £80 a month into a pension, the government puts £20 of that 80 of the money into the pension for you. So £100 goes into your pot, but it only costs you 80. Now that is only 20% tax relief, which you get at source. Now, if you're a high rate taxpayer, somebody earning over £44,000, there is an extra 20% tax relief that you can claim on these payments. So even if you're not a self-assessment payer, you can call HMRC, you tell them you're paying into a personal pension, and you'll get the extra 20% as a tax allowance on your coding. Very easy to do, could be worth a lot of money to you. If you're paying a few £1,000s a year and you've got 20% extra tax relief, you do the maths on that, that's a lot of money. You can go back 4 years. So the maximum you can go back, so in February 2018, you can go back as far as 13-14 to get 13-14, 14-15, 15-16 and 16-17. That's 4 years you can get, as long as you claim by the 5th of April 18. So on the 6th of April you lose a year, so it's worth having a look at it sooner rather than later, so you don't waste the extra tax relief that you're entitled to. So that's pensions. That's personal pensions. Not everybody. Before we move on, one thing worth pointing out about pensions is that some people, generally speaking, in the larger companies, will, if they're a 40% taxpayer, could actually be receiving the full 40% at source through their payroll. Yet, as I said, this generally happens with the very large companies. who run the scheme that goes through the payroll, and it reduces your taxable pay. But it's very easy to see. If you look at your 2 consecutive pay slips, you can tell which kind of scheme you're in. If you're in a government auto enrolment scheme, the chances are 95% that you have extra tax relief to claim. Most of these schemes, you only get the 20% through the payroll scheme. The other 20% you need to claim. So that's well worth just a little bit of investigation there. Ask your payroll department whether there is an extra 20% to claim or not. The final thing to claim that crops up all the time, I see it, and that is expenses that you are allowed to claim in your employment. Now, I don't propose to give you a definitive list of these, just a few of the ideas where you can claim extra against your PAYE tax. So firstly, if you're a uniform wearer, i.e. you're provided with a uniform, you can claim for the cost of laundry, cleaning it. £5 a week, £7.50 a week, a sensible amount. So that could be nurses, doctors, firemen, policemen. Very straightforward. If you've got a uniform, there will be a tax allowance that you can claim. Again, as with pension payments, you can go back 4 years if you haven't claimed these previously. If you're an airline pilot, I know it's not the most common of jobs, but those that are airline pilots, there's a very, very generous pilot's tax allowance you can claim. The most common one is mileage. A lot of employers only pay, 20p a mile. For example, I think Tesco's recently, I think they pay about 18p a mile generally for their business mileage. Now if you do 1,000 miles a year and you're only paid 18 pence a mile, you can claim the additional mileage between 45p and 18p against your tax. So you'd make a claim for those 1,000 miles at the difference between the 45p and the 18p at your marginal tax rate. Could be quite a significant amount. Home working is another very common area where you can get a tax deduction for working from home. If you're contracted to do perhaps 1 day a week, then you're going to be able to get a tax allowance for working from home in your PAYE coding. So these are just 4 or 5 ideas. There's many, many more that are available. Look it up online. There's free resources everywhere. There's forums everywhere talking about it. But generally, there are so many things you can claim for. There are accountants out there who just do rebate calculations for people for a percentage, but you don't really need those people. You just look it up and claim it. It's very, very simple. Thank you.